I told you it's not ready yet.
Honey, just show it to them.
お前はもう死んでいる。
Godson, that's wonderful.
All right, hello and welcome to Camel Finance. I'm your boy Camel, and today is of course the day that we will get to find out what the Fed is going to do in terms of the interest rate hikes. The CME probabilities currently have us at 90% chance that we will see a 25 basis point hike. What is very, very interesting is following a few Fed speakers and stuff yesterday, we saw the June FOMC went from a 35% probability of a 25 basis point hike to a 23% chance of a cut in just 24 hours. And then just a few hours later, we fast forward to this morning. And what we have, if you look out to the June meeting, is an 88.2% chance that today's 25 basis point hike will be the last one. We currently have 11% chance that we will see a cut at the next month's meeting. So things can change and they can change quickly. And oh boy, are they changing quickly. Just to make sure we're all fully understanding this, there's a 90% probability that we will see a 25 basis point hike today. And there is a 88% chance that that is the last rate hike. So if I click forward into this melt up chart, you can see that we are likely going to get this pause. Something that is kind of concerning to me is that there's a small chance here that we're going to get a 25 basis point hike today, followed by a cut at the next month meeting. Now, if we go straight to cutting, then I think we have to scratch this melt up off. If they decide to pause rates and hold them at that current level for a couple of months, that will give the market space to have this blow off top move. However, if we move straight to cutting, then it's likely going to be time to exit the market. So this is something I'm going to be paying a lot of attention to. There is first a month of price action to get through, so I'm not hyper focused on this just yet, but the next FOMC meeting could be very, very critical. If we don't get a pause and we move straight to cutting rates, then it's likely we're going to have to scratch this off, and wherever the market price is trading at the time is likely going to be the top before we roll over. So laser focus required over the next month. First, I think it's time to find some cycle lows. I'll show you that when we get to the charts in the end. Everything seems to be setting up quite nicely for a buy the dip opportunity over the next week or so. We apparently are doing this again. As you can see, banks continue to blow up. Here's PacWest and Western Alliance. As you can see, charts absolutely diving off a cliff. So things continue to break, banks continue to blow up. And this is, of course, pressuring the Fed to start to come back off of this aggressiveness in terms of the rate hikes. The Fed is essentially done hiking, and the big question is, do we move to a pause for a couple of months first, or do we go straight to cutting? Like I said, if we do the latter, that will be quite severe for price action. If I hop back into this melt up chart, I want to point something out. Keep in mind, we have had this marked here, Congress banned from owning stocks. We've had this here since I proposed this all the way back in the summer of last year. I said that it's quite possible they're going to blow this thing off and let Congress out at the top. Now, they'll frame this under ethical reasons. They'll frame this as it's unethical that Congress gets to insider trade and that we want to start to do the right thing and restore trust in government. But I said all along, what we will likely just see is them blow the market off and let Congress out at the top. Now, we saw this with the Fed officials here. They let the Fed officials out of the top here. They banned them for quote unquote ethical reasons from trading stocks. And that signaled the top of the market before we entered this bear market decline through last year. So it's very, very possible that we're going to see the same thing repeat just with Congress this time. And to back this up, we're now seeing US representatives introduce bills to ban Congress members from trading and owning stocks. Now, this has been mentioned and proposed a few times. They often kick the can down the road with this. It's been delayed a number of times. However, we're actually for the first time in a while seeing this start to gain traction. You can see here, they are proposing this bill to ban Congress members from trading and owning stocks. And specifically, this would also prohibit congressional spouses and dependents from stock trading as well. It goes on to say that the fact members can find common ground on key issues like this should send a powerful message to America. Well, of course they can find common ground. Of course they agree with it, because they all want to be let out at the top before we enter the Great Depression 2.0 that likely is resolved after some time with a great reset and a switch over to a new digital system, possibly with CBDCs and alike. You can see here, we must move forward on this issue that unites us. Of course, they are keen to be let out at the top before things start to get really, really bad. They say trust in the government must be restored, which is a hilarious statement, since all they will be doing is letting Congress out at the top before the massive rollover. They go on to admit that this has been an issue for some time. However, notice how they didn't really have a problem with it for many, many years. They then go on to say that this whole bill has received overwhelming support, and like I said a minute ago, of course it has. Of course they're all supporting of this because they're going to be let out at or near the top before we then undergo a massive crash. So the question remains for me, do we get this full blow off top? Do we get a full melt up first, or are we going to end up topping out somewhere in this sort of neighborhood before then rolling over? That of course is to be determined, and you can see, just like they did with the Fed, where they frame it under ethical reasons, they are starting to do this again. When members have access to classified information, we should not be trading in the stock market on it. So, I mean, again, they never really had a problem with this until now. I find this all to be quite distasteful, quite ironically funny, and at the same time, it really isn't funny because, like I said, they are likely going to blow this off. I don't know how high it goes. Nobody knows how high it goes. That's to be determined. But then they're likely going to ban them at the top, and that ban, possibly coupled with a rate cut, is going to be the catalyst to top the market. And then I think it's time to get super bearish. Bitcoin will continue to do Bitcoin things, I'm sure of that. Bitcoin is still the exit, of course. And we had Balaji just recently donate 500k to Bitcoin development. I also saw a video, there's a video circulating Twitter, of Balaji explaining that he doesn't expect to win his $1 million bet. And really, he just spent $1 million to alert the masses to the fact that the banking crisis is much more severe than most people realize. Whether it happens in months, years, or even a decade, we do know at some point these banks are all going to collapse. And when they do, you will want to have exposure to Bitcoin, gold, and silver. Adoption continues to thrive for Bitcoin, and you can see a $33 billion digital bank, Revolut, has now started to offer Bitcoin to millions of people in Brazil. So this is yet another country which is getting involved in Bitcoin and can now access and get exposure to Bitcoin. Over in traditional finance, Goldman Sachs has shown that retail investors have sold twice what they accumulated during the pandemic over the past 15 months. So we still have record levels of bearishness. We still have record levels of shorts. And this, for me, aligns nicely with this blow off top thesis. I think it makes the most amount of sense, rather than to crash this market now and let all these bearish people and all the retail shorts profit from the crash. I think first we have to blow this thing off, get them to all come back into the market, providing the exit liquidity for Congress to sell at the top. And then, of course, when everyone is optimistic that we've said goodbye to this bear market, we're trading at new highs, or at least towards new highs, that is when the Congress will be let out. That is when the rates will be cut. And that is when we will finally roll over and have this massive Great Depression 2.0. In the shorter term, you can see the dollar still working on this sort of sideways consolidation. I think ultimately it will break down and it will likely go to around 95 for the Dixie. However, in the short term, maybe we've got a little bit more chop to work out. I don't have a great deal to say about the charts other than this looks set up quite nicely to undercut this low into that cycle low for the S&P 500. And I think that's where we can get long. So how low down it goes, I don't know. But some kind of undercut of this local low here would make perfect sense for me to see a dive down into that. And then I think we can come out of there swinging. I think we can put a position on, perhaps on a trend line breaker, this blue trend line, or a swing low pattern out of this cycle low. The stop can go just below the low, and then we can look to ride this final blow off move. I think if the S&P is going to do that, we'll likely see the NASDAQ pull back as well. But again, I think that will be a buyable dip. I think the same is true of the Dow. I wouldn't be surprised to see the Dow come and undercut this low as the S&P does. And then I think we can rocket higher. VIX is supportive of this, as you can see, so still contained underneath this green level of support, which is now resistance, not speaking to a massive spike in volatility as of yet. And again, all of this seems to align nicely with the fact that we are likely going to see the VIX trend down whilst the stock market has its blow off move. As a side note, I've mentioned this a few times on the channel, I think if we can get down to the low teens for the VIX, the trade of the year will be to long the VIX from the low teens as we experience this massive spike in the VIX as a result of the stock market crashing once Congress are let out at the top and the rate hikes start to be cut. So in terms of the stock market, a little bit of patience whilst we try to find this cycle low. It's due any day now, so all we'll be looking for is an undercut of this low here, and that will be enough to then be searching for a swing low pattern to come out of there. So a tiny bit more patience and we should be rewarded. It's a very similar story for Bitcoin. I still expect this low to be undercut. I expect us to have a dive down here into that 9th of May timeframe. Remember, this is plus or minus 6 days. So we're just about getting into that timing window now. Any plunge down here followed by a reversal, a swing low, is, in my opinion, an opportunity to add. And that is what I'll be looking to do as we ride the next 60-day cycle to the upside. Gold may have found a cycle low early, or preferably the look for me would be that we get one more final flush down to undercut all these lows, and then we can go. I would feel much more confident in labeling that the cycle low. But if it's just going to continue to trend up, then we can't argue with the trend and we'll have to flip long. We still have exposure via the miners, as you can see. So as it stands, starting to push up, happy days there. Silver still hanging around a little bit of profit, still kind of sideways, but we'll see how this goes. Either way, whether gold dives down or whether gold flies, and so do the silver markets and the miners as a result, we should be able to walk away with some profit here. But again, I think patience is the order of the day. I've been talking about IPX as a possible trade idea. I'm still looking to get long, but as you can see, we have not broken out just yet. Given where the cycles are for the US equities, I wouldn't be surprised to see this reject one last time and then come along and break out. If it does, that'll be a long from me wherever it breaks out. So expect me to tell you I've gone long. It's just a trade idea, but I think one that will provide nice opportunity over the coming days and weeks. So that's it from me. Remember, FOMC, they play a lot of games, they do a lot of tricks, they do a lot of big wicks to up and down sides. So my strategy for most FOMCs, in fact all FOMCs, is to kind of sit patiently back, let the dust settle, and then see what happens. Like I keep saying over and over again, I think patience is the biggest take-home message here. If we can wait to see some nice cycle lows, that will give us the best opportunity and the easiest trade setups to get in at. Of course, I'll be doing this live on the channel. I've been calling this out for weeks now, so none of this should be a surprise if you've been following the content. Best thing to do for me now is just to play patiently, wait and see how they form, and then see if we can get some risk on as we enter what I believe will be the final blow-off top portion of this melt-up before things get very, very ugly indeed. So, in the meantime, that's it from me. Take care. Hope you're doing well in life. All the best. Cheers. Bye.
Whoa, 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 whoa! What? Whoa, whoa, whoa!